Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock, let's go over the market, let's talk about what is happening with Tesla stock and what I personally expect moving forward, well, it's the rest of the week essentially. So all that being said and done, ladies and gentlemen, if you enjoyed the video, don't forget to hit that like button. This is not financial advice and I am not a financial advisor. And of course, my membership section on YouTube is live. Just want to look at the volume here. That link is of course down below in the description of the video. If you're interested, for just $2.99 a month, you get access to all my intraday thoughts, posts, updates, etc. every day on Tesla and just the broader market, sometimes as a whole as well. Every single day, yeah. So if you're interested, check it out. Also, for $5 a month, you get access to all of that, plus NVIDIA daily updates as well. So, ladies and gentlemen, let's jump into it. Tesla closing the day up about 2.5%, closing at we'll say just above $216 per share, which compared to the market is, roughly we'll say in line with the market, give or take. Though arguably I would say Tesla actually underperformed the market's intraday. You can see the market definitely did better intraday than Tesla did, closing at pretty much the highs of the day, while Tesla definitely not closing at the highs of the day, about halfway up there from the actual intraday price action. Which of course was piggybacked off the fact that Tesla just had a nice gap up to start the day, which definitely helped that momentum a little bit. So all that being said and done though, let's jump into it. So the way I look at it is this: we actually have a pretty, honestly, somewhat easy. Okay, I don't like using the word easy. Nothing is easy. Nothing is guaranteed. But we have a nice pattern setting up that can make things a little bit more predictable, hopefully, moving forward. So let's talk about that. Let's start with the easy stuff, right? The easy stuff here on the 15-minute chart, looking into tomorrow. You definitely want to look for this little wedge that we're in, right? This little wedge that we're currently in. Watch for this to break one way or the other. To make it really simple, if you don't want to draw these lines, or I don't know, for some reason you don't know how to, you can also take a look at, 219, right? If Tesla breaks above 219, that's a pretty damn good sign, which can hint the fact that it wants to break 220, because if it breaks 220, in my opinion, it breaks the high of the day, which we'll talk about soon and why I think that's important. Should make it move up to about the 225, 224-ish range once again, which I'll also explain why that's important pretty damn soon. However, if we break below this wedge, and especially pretty much if we break really just below 215, to make it super simple, but like 215.2 roughly, just somewhere around there, most likely the move down continues, and we at the very least come down for a double bottom test all the way down here closer to 210. But especially if we break below today's low, which was around like 214-ish, I will say, then we most likely come back to Friday's low around 210. If we break that, I think Tesla gets very, very bearish. That's a simple way to put it, right? But now let's talk about why those levels are important. Like, why am I saying all these levels? Well, first and foremost, we have the 1 hour chart I want to talk about, right? The 1 hour chart here is important because, well, Tesla obviously, and the market as a whole, really, massive drawdown on Friday, right? Massive selling pressure, closing at the lows of the day. I'm actually pretty surprised it actually gapped up today, right? Usually when you get these kind of really weak days and weak closures, closing at pretty much the low of the day, it's not uncommon to get a gap down. And what I personally wanted to see, when I was hoping to see, is a gap down, a little bit of a bear trap, and then we rally past this gap fill and go back above the gap fill. That's what I wanted to see this morning, right? I want to see something like this and then up to make a massive bear trap. Instead, we ended up just going up. So it's not necessarily a bad thing, obviously. It's just, I personally think this would have been more bullish. But anyway, regardless, this makes things a little bit more interesting. Why? Well, we are printing essentially an inside day candle on the daily, which we'll talk about soon. But the reason I bring up the 1 hour chart here is the fact that, this, again, there is a chance that what we have right now is nothing more than a Deadcat Bounce, right? And we could get one more leg higher. There is a very valid reason, or chance rather, that we can get another leg higher, moving up to somewhere closer to 222 to as high as about 225, right? I think that's a very plausible scenario for a few reasons. So first reason is, well, if this is indeed a Deadcat Bounce, we take the Fibonacci from that swing high recently we had somewhere around that 235-ish region, right, not too long ago, and we go to that swing low that we had on Friday, measure it, and then we have, so far we've been getting actually rejected at almost to perfection at the 382 Fibonacci. If this is as high as we go and we cannot break above this, in my opinion, that shows that Tesla is actually pretty weak. This would not be an ideal scenario for the bulls, and pretty much an ideal scenario for the bears, showing that this down move right here that we had on Friday was pretty powerful, and that the fact that bulls can't even get back above the first retracement level would be pretty bearish. However, if we do get above the first retracement level, which essentially is above today's high, which essentially is above 219 to 220, that most likely means we go up to either the 0.5 or the 618 Fibonacci retracement, which is anywhere between 222 to pretty much close to 225. Those are the levels I'll be eyeballing, honestly, as early as tomorrow, really, right? We have CPI on Wednesday, PPI on Thursday, so keep that in mind as well. But those are the main levels I'll be eyeballing, again, as early as tomorrow as potential Deadcat Bounce targets. Because if these levels, if we get to these levels and we do not break above these levels, there is a damn good chance that this was just simply a Deadcat Bounce, right? So you really want to watch for that 224, 225-ish range. Again, before it was also as a massive area of resistance back here. You can see not too long ago, which ended up constituting a pretty decent sell-off after that rejection, right? And that's exactly what we're kind of doing here right now. So that's why you want to make sure, we break above 224, 225, just for typical resistance range that, I just want to see broken, but also to potentially, reduce the chances of this just being a dead cat bounce. Pretty simple stuff, and that's kind of what I'll be looking for moving into, like I said, tomorrow, or I assume tomorrow, could be Wednesday, could be maybe even Thursday, but I'd be surprised if it's later than Thursday, probably tomorrow or Wednesday, in my opinion. So those are the main things I'm looking at on the 1 hour chart. Now let's take a look at the daily chart. The daily chart makes things also pretty nice actually for us, right? There's a few things you can be looking for here on the daily chart. Let's talk about the bearish things first really quickly, right? The main bearish thing that I really want to mention is the fact that the BX trender is making a lower low now on the daily chart, which is showing that bullish momentum is slowing down. And this daily stochastic has officially crossed back to the bearish side on Tesla, despite today being a green day. Also to me showing that the bullish momentum is definitely slowing down. Two things that I personally, I do not like to see. So just my opinion. Again, I personally put a lot of emphasis into the daily stochastic, especially on Tesla. It's not perfect by any means. This could be one of those situations. Absolutely. This could be a false breakdown. But again, if I see it cross, I assume it's bearish until proven otherwise. So that's one thing that's a little concerning. But to give it a little bit more weight, right? To give this a little bit more than just, okay, well, cross below that suddenly is bearish. Is there anything more to it than that? Well, there is. Thankfully, the candle patterns, the daily candle patterns we have setting up right now are pretty simple. And the way I'm looking at it is as follows. So one pattern we have potentially setting up here is, you can call it a bullish Harami reversal, where essentially you have this candle like this within the range of yesterday's very large red, not yesterday's, Friday's very large red candle. Or in other words, you can also look at it as a potential inside day candle. I just look at it as an inside day candle. I don't really care if it's called a Harami or not. That doesn't mean anything to me. What does mean something to me is the fact that it is an inside day candle, which essentially also means the fact that now what you want to be looking for is going to be a break above this range, right? That's usually how inside day candles work. You get an inside day candle like this, you wait for the range to get broken either to the upside or to the downside, which, like I said, if you look at today's high, pretty much 220, look at today's low, pretty much 213.5. If one of those levels breaks, you most likely are headed in that respective direction. Another reason why this is important is because, like I said, on Friday, we did actually print a massive bearish engulfing candle. But with most candles like this, you always need follow through. Today, we didn't get that follow through, but it's not enough to also negate this bearish engulfing candle. So the massive, like the bigger picture that you want to be looking at for Tesla, right? The picture that, if you kind of want to zoom out, because again, what I'm mentioning right now for this, today's candle to break that range could just be for simply just this week, right? It could just be a short-term move nonetheless. If you really want to play like the long-term, like maybe not the long-term, but like more of a medium term, I guess, maybe like a few weeks to a few months even move, right? And you want to kind of get a potential idea as to the trajectory of that, this is where this red candle comes in. In other words, if you break the range of this red candle, in my opinion, that is most likely, nothing is guaranteed, but most likely the trajectory that Tesla will be continuing in for the next bit, honestly, right? For the next little bit for sure. So again, in other words, pretty simple stuff. Look at the high and the low of Friday's candle. The low was pretty much 210.5. The high was pretty much 233.5. Break above 233.5. I think Tesla is most likely going at least to the mid to low 240s, potentially even maybe all the way back up as a retest to, all the way up here around 265. If we break above this candle's high, Friday's candle's high, which again, pretty much that mid-ish 230 range. On the flip side, if we break below this Friday's candles range, which pretty much, again, like I said, is what, 210 roughly, right? 210.5, we'll say roughly, right? Somewhere around there. We have support below at 207, 203, etc. But I would assume that those supports will crack. Why? Because if we break below and especially close a daily candle below Friday's candles range at the bottom, that most likely has a very high chance of essentially activating this bearish engulfing candle, this very, very massive bearish engulfing candle, and this most likely will begin to play it out. So keep that in mind. Just because today is a green day, and maybe even tomorrow, maybe if we do even go up to 225, that still technically doesn't fully nullify this bearish engulfing candle. To really nullify this candle, you want to break above its high range. That will nullify it, or break below its range to activate the pattern, or to activate this candle pattern, right? So that's really what you want to be looking for on a little bit of a bigger, more zoomed out picture, in my opinion, right? But again, unless this is a false flag and this is just a fake, a false bearish crossover, at the moment, to me, it's signaling the fact that, there's a higher chance it will break to the downside than to the upside. So in other words, it'll break 210 before it'll break 235. Even if we get this move up to 222 or 224, 25, whatever, even if that happens, again, this still doesn't nullify this pattern. You want to break the range of it. That's really, really, really important. We'll see if that happens. I don't know which one will happen. I'm not trying to predict which one will happen. At this point, I'm kind of letting the price dictate for me. But then, you might be thinking, but then what was the point of talking about today's range, right? Why does breaking today's range even matter? The reason it matters, in my opinion, is because if we break below today's range that we had, let's say tomorrow, right? So essentially below like 213.5, that to me very much increases the chance that we most likely will break below this bearish engulfing candle, and we most likely will essentially create a bearish trend moving back down. And if this occurs, by the way, if we do break below this bearish engulfing candle below 210.5 and we start closing daily candles below it, let's say tomorrow as an example or whatever, right? Let's say that does happen. I personally do believe that Tesla really opens up the possibility now of heading back down to the 180s to the 170s. I think that becomes a very, very realistic possibility once again. And it could happen pretty damn quickly, especially as we're heading into still a very weak seasonal time in the market, September and especially October in an election year, which is exactly what we're in, especially an election like this one. It's a pretty spicy one. Again, we'll see. We'll see. I mean, you just let the levels dictate it for you, right? It is what it is, right? I mean, if it breaks below, it breaks below. If it breaks above, it breaks above. It is what it is. Let the levels dictate for you. I think that's going to be the best way to determine it, in my opinion. And there's no reason to guess it, no reason to think you're smarter than the market, and you can predict the unpredictable. Let the levels play out. Let it dictate for you. Now, one thing that does give, a little bit of validity to potentially getting a little bit of a move up is going to be on the 65-minute chart. Something I kind of started using a little bit, thanks to someone on Twitter or X called Jacob Jones. He uses it quite a bit, actually. I know a lot of people that use it, but he seems to rely on it quite a bit, and it's working well for him. So, are these little, situations here? These are essentially fair value gaps. We've talked about them before on this channel, but they essentially act as magnets, price magnets. They're imbalances, right? If we get a fair value gap, that means that the price essentially moved down too quickly. So you can see it creates a fair value gap here. And what that usually means is at some point or another, usually sooner than later, but not always, it'll come back up to fill this fair value gap. It's not a gap fill, but in practice, it's similar. It's just not literally a gap fill. It just means that the price essentially moved down too quickly. It left an imbalance, and the price has to move back up here to fill this imbalance before potentially making its way back down once again, potentially even lower, which is another reason why there is a chance that this breaks above this high, right? There's a real possibility that Tesla does break this high of, today's high of what, 219 roughly and a half or whatever it was. And it does move up to that 0.618 Fibonacci, closer to 224, 225, which is exactly where this imbalance is. And it comes right into it, gets rejected, and then essentially makes its way back down. So in other words, it'll look something like this, right? Let's just draw it out over here. I want to remove this for now. Let's just draw it out, right? The imbalance right now that you just saw there is sitting somewhere around here, right? Somewhere like that, right? Give or take, right? This is the one we literally just looked at. So in other words, we can potentially move up all the way like this, get a rejection. We still never technically canceled out that bearish engulfing pattern or a candle, and we can still get rejected and make our way back down like this. Like, this is kind of my main scenario right now that I foresee happening, something like this. And we'll see. We'll take it day by day. I mean, the 1 hour stochastic is bullish. It's looking pretty decent. So the very short term is actually not looking too bad, right? It's not looking too shabby. And I definitely would not be surprised to see a move up a little bit higher like that. So again, like I said, Tesla moving up about $10 from here, maybe just below $10 from here, right? Very real possibility. But as of right now, I do expect a rejection around this level, which is that fair value gap. And I do expect to move lower and ultimately to start playing out this bearish crossover on the stochastic. So that's just kind of my current projection, and that's kind of what I'm seeing. But again, let the levels dictate it for you. Let that happen all in itself. And yeah, that's kind of what I got for you today, ladies and gentlemen. In terms of options flow, by the way, take a look at it. Tesla, nowhere really to be found. I mean, a little bit on the bearish flow here, but only 3.5 million, which is nothing to write home about. Pretty relevant in my opinion. And in terms of options flow, like directly on Tesla over here, you can see all over the place. Had some nice calls come in, 1 million, for instance, that came in on Tesla. Hard to say if they're still in it, of course, but ultimately, other than that, it was pretty slow of a day for options flow. We had another 1 million over here. So those are the two big ones. But the fact that Tesla only has 3 million total of confirmed, actually has 3 million confirmed bearish flow implies that they most likely exited those positions, I'd assume. But again, I'm not 100% on that. But, you know, it is what it is. I mean, we'll see how it plays out, of course. Also, if you're interested in using these option services, I have a link to them down below with a discount code for Cheddarflow, which is this one, and Blackbox, which is this one. So definitely check them out as well. But this video is already 14 minutes. My goodness. Thank you so much for watching. I'll see you for the next one. Peace.